Every profitable trader you admire has one thing in common that you never see on social media. It is not their win rate. It is not their magic strategy. It is not their perfect entries. It is a very specific, very ugly, very painful phase they had to survive before they ever became consistent. And almost nobody talks about it honestly. It is the phase where you know just enough to be dangerous. You know what a good trade is supposed to look like. You know where your stop loss should be. You know you should not overtrade, you should not move your stop, you should not chase candles after a loss, and then the market opens. And you do every single one of those things anyway. You wake up motivated, promise yourself you will be disciplined, and by lunchtime you are in trades you did not plan, with size you did not intend, asking yourself, what is wrong with me? If that feels familiar, listen closely. You are not broken, you are not uniquely bad, and you are definitely not the only one. You are just in the phase that decides who becomes a real trader and who quits. Let me introduce you to someone you probably recognize. We will call him Lucas. Lucas found trading exactly like most people do. One night he saw a short video of someone making a few $1,000s in a day trading crypto. Fast screen recording, green profits flashing, a caption like, "I made this while I was at the gym." Something clicked in his brain. He thought, if that guy can do it from a laptop, why am I not doing it? He opened an account, funded it with money he told himself he could afford to lose, watched a few beginner videos, and jumped in. At first, it was exciting. Some trades won, some trades lost. It felt like a game. He had no real rules, but he had hope. Whenever he made money, he felt like a genius. Whenever he lost, he blamed the market. Then, like a lot of traders, he decided to get serious. He started learning. He watched hours of content. He learned about support and resistance, candlestick patterns, indicators, risk to reward, psychology. He started writing notes. He told himself, I have a system now. I am going to follow my rules. I am going to be disciplined. And this is exactly where the painful phase begins. Now, when he sits down to trade, he has a list of rules. Risk small. Wait for confirmation. Do not chase. Do not move the stop loss. Journal the trades. Day 1, he follows it for about 20 minutes. Then the market does what it always does. A move starts without him. A candle rips in one direction. His heart rate goes up. His brain whispers, "You are missing it. This is the big one. Just get in now. You can be strict later." He jumps in late. The trade pulls back. It starts to move toward his stop loss. Instead of taking the loss like he promised, he drags the stop a little further away. Just to give it room, he says. You already know how this ends. The trade hits the new stop anyway. Now he is down more than he planned, and he is angry. He wants to make it back. So he takes another trade that was never part of his plan at all. By the end of the session, he has broken every rule he proudly wrote down that morning. That is the painful phase. The problem is no longer that Lucas does not know what to do. The problem is that he cannot seem to do what he knows. He knows the theory, but his behavior refuses to cooperate. That gap between what you know and what you actually do is where most traders get stuck for months, sometimes years. This phase has 3 brutal patterns. The first is strategy hopping. Every time Lucas has a bad week, he blames the strategy. He changes his entire approach. One week, he scalps tiny time frames. The next week, he tries swing trading higher time frames. Then he jumps to a new indicator he saw on social media. Every new idea gives him a little burst of hope, but the cycle repeats. A few losses, confusion, frustration, and then he throws it away. He never sticks with anything long enough to know whether it actually works. He is trying to escape the pain by changing the outside instead of working on the inside. The second pattern is emotional risk. In his notebook, his risk per trade is small and logical. In reality, it changes with his mood. When he is confident or excited, he increases size just this once. When he is scared, he risks almost nothing, even on good setups. After a loss, he sometimes doubles his size to get it back faster. His risk is not a rule, it is a feeling. That is like driving a car where the gas pedal and the brakes are connected to your emotions. Every time you feel something, you slam one of them. Sooner or later, you crash. The third pattern is identity crisis. After enough loops of this, Lucas stops saying, "I made mistakes today," and starts saying, "Maybe I'm just not built for this." He imagines that real traders never feel like this, that they were calm and disciplined from day one. He does not see their painful phase. He only sees the highlight reel, so he takes something that is normal and temporary and turns it into a permanent judgment about himself. That is usually the moment people quit. So how do you survive this phase without giving up or blowing up? Let us rewind and run the same story, but slightly different. Imagine that instead of chasing the next strategy, Lucas says this to himself: "For the next 3 months, my goal is not to make a lot of money. My goal is to become the kind of person who can follow a simple plan with small risk without losing control." That sounds boring. It does not look sexy on social media. But that decision is the beginning of his transformation. He does 4 things differently. First, he cuts his risk to a level that feels almost too small. If losing one trade ruins his mood, his size is still too big. The right size in this phase is the one that lets him take a loss, feel it, but still think clearly. Second, he chooses one simple setup, not 5, not 10. 1. For example, trade in the direction of the main trend after a pullback to a clear level with a clear rejection candle. He writes this in 1 or 2 sentences. He also writes where the stop loss must go and a realistic target. That is his playbook. If the market is not showing that picture, he does not trade. Third, he limits his trades. He tells himself, "I can take a maximum of 2 or 3 trades per day. If I break one rule, I am finished for the day." This hurts his ego. His ego wants 10 chances to be a hero, but he is no longer trying to be a hero. He is trying to build consistency. The limit forces him to become more selective and more calm. Fourth, he starts journaling every single trade, not with a huge spreadsheet that becomes a full-time job, just a simple log, date, market, long or short, reason for entry, whether it followed the plan, result, and 1 sentence about how he felt. This is not for anyone else. It is a mirror. After a few weeks of doing this, something strange happens. The market is still the same chaos it always was. There are still random moves, fake breakouts, bad fills. But Lucas is different. He looks back at his journal and sees a pattern. The really ugly loss days are almost always the ones where he broke his own rules. The days where he followed the plan, even when he lost, the damage was small and controlled. He realizes that his biggest enemy was not the strategy. It was the part of him that thought the rules were optional. The painful phase starts to feel less like a curse and more like training. He stops seeing every loss as proof that he is a failure and starts seeing it as feedback. He can say, "I lost money today, but I behaved like a professional," or "I won money today, but I behaved like a gambler." That shift is everything. Here is the part nobody tells you. This phase never completely disappears. Even experienced traders still feel impulses. They still get tempted to overtrade, to move their stop, to enter too early. The difference is, they have lived through the painful phase long enough to recognize those impulses and build routines that protect them from themselves. They have scars. They remember exactly how it feels to blow up a day by breaking one small rule. Those memories are part of their discipline. So if you are in that messy middle right now, here is what I want you to take away. The pain you feel is not a sign you should quit. It is a sign you are finally close to the real work. You have moved past the fantasy stage and into the stage where you have to build a new version of yourself. You do not need 1,000 new strategies. You need one clear plan, one small risk number, and the courage to follow it for long enough to see what happens. You do not need to be fearless. You need to be honest. Honest about how you feel when you trade. Honest about the rules you break. Honest about the fact that the market is not the problem. Your behavior is. Every trader who is consistent today had their version of Lucas's phase. They bled, they raged, they wanted to quit. The only difference is that they did not run away from the pain. They studied it. They used it to build structure. The painful phase is not the end of your story, it is the test. The question is simple. Will you keep trying to escape it by changing everything on the outside? Or will you finally decide to walk through it by changing what you do on the inside? If you choose the second option, you are already further along the path than most people who ever open a chart. Not because you are smarter, but because you are finally willing to do the one thing the market always rewards in the long run: disciplined, boring, uncomfortable consistency.